Hey guys, Mike Thornton here. Today I want to take you through a quick analysis of Wheaton. That's one of the markets our team serves. So I'm going to get right into InfoSparks, which is one of the systems I use to analyze data. And I'll take you along with me so you can see exactly what I'm looking at on a day-to-day basis. So here we go. All right, so first I'm going to bring up Wheaton, which is area 187. And the first thing I like to do is take a look at sale price. Now, what's good about this is we can look at specifics around price ranges. We can look at single family versus multifamily. We can look at townhomes versus detached single family homes, new construction, all that good stuff. So if I'm trying to get a sense of Wheaton in particular, and if I'm most curious around houses that are, maybe we have a trade up buyer that's looking between 450 and 600, I can make a custom range for that. And then I can go see how the market's performing. So this is really interesting because we've heard about all the market appreciation lately, but if you're looking at Wheaton in this 450 to 600 range, we're really not seeing drastic appreciation. Now we do have somewhat of a move from 2019, but in 2018 we had a similar spike. Now part of this is property mix as well. So this isn't perfect, but it's directional, right? So part of it could be influenced by different factors. But if we went to a longer horizon, you can kind of see where the market's gone in this price range. Now let's select all price ranges. When you select all price ranges, you can see the move upwards and to the right, and you can see that market appreciation. Total Wheaton's up 14% over the last 12 months, which is what I expected to see. But within that, what I would always tell folks is that there's always three markets within a market. There's always going to be a seller's market, a neutral market, and buyer's market. And the difference between those markets is likely price point driven. So generally speaking, if you're trading below the average trading price, you're likely going to be a seller's market. If you are above that average trading price, in this case, let's just say 450 to 600, you're in that neutral price or that neutral market range. And if you're in the luxury market, so 2x, 3x of the average trading price, that is almost always a buyer's market. It's a little bit different in COVID times here where inventory's been super tight for quite a while. But that aside, that would be typical for what I would see. And that's just about for any single town that we look at. If you go down in price enough or up in price enough, you're bound to see a buyer's versus a seller's market. So here I am looking at total Wheaton. I want to look at detached single families by themselves, resale, traditional, so no distress sales, and you kind of can see that the average trading price is 483 in Wheaton, and now that's up considerably. June 2020 was 413, so that's a huge move up. The other metric I like to look at quite a bit is months of supply. Inventory levels is the most important thing in real estate. More important than the comp next door is how many buyers are in the market, how many listings are on the market, and how demand and supply interact with each other is everything in real estate pricing. So as we can see in this chart, you can see the move down in inventory. The national inventory is displaying something very similar to this, where we're hitting a new low in inventory levels in Wheaton. The low nationally, last week's data was the second lowest inventory level we've seen since basically on record. The lowest week was 327,000 homes in April of 2021. And the second lowest week was last week's data, so early January 2022. We were sitting at, last year was 307, this year's 326. So next week could even trend down even more, as I do anticipate inventory tightening even more before the spring market kicks off, where a lot of sellers think it's time to list their home. So very interesting, we can see here. If I want to get more specific, which I do, I can go in, I've already created some custom areas where I can go in here and draw, basically a circle around any given neighborhood. I can name it, and then I can get more specific data. So this is what we do for our buyers and sellers when we're analyzing a neighborhood. We don't want to be just as broad as Wheaton. We want to be as specific as a neighborhood within Wheaton. So I believe I have one set up for Lowell. And you see how it says my area, Indiana to Lowell. Or you can see Lowell Elementary School. That district is an area that I created custom. So let's look at that. That's our old neighborhood, and we can see that the average home there is going for $377. That's up 10%. Months of supply of inventory, 1.3 months. So what that is saying is if there's 100 listings, for example, in this neighborhood, it's going to take 1.3 months for all that inventory to turn over. Anything under 4 months would be considered a seller's market. 4 to 5 months would be considered a neutral market, and anything above that would be considered a buyer's market. So whenever you hear those terms, it's all relating back to inventory levels. Some other interesting facts. We can look at how long a listing's on the market before they receive a contract. So that average in Lowell is 26 days. We can see how many showings it takes to sell a listing, which is kind of interesting, and where that's trending. So the average home is shown 19 times before it goes under contract. So all kinds of great data here. We can see market time. We can see the percent of original list price a seller is securing on their listings. So this is another metric we can look at to see how competitive it is for buyers out there. As this number climbs, it's basically an indication that the sellers are basically getting almost all what they're asking for. And again, this is an average, but it's just important to kind of see where this is trending when advising buyers or sellers on the market. Now, this market is moving so quickly that it's really important to, as when you're representing sellers, to be looking ahead of where this is trending, because if you decide on pricing today in early January but don't go on the market until March, you might actually shortchange yourself. So it's important to look at this trend to see where this pricing is likely to be when you hit the market so that you're not underpricing. Or on the flip side, from a buyer's perspective, if this trend continues, the same house you're looking at today is no doubtably going to be more expensive tomorrow and more expensive the day after that. In addition to interest rates rising, real estate's only getting more expensive as far as affordability goes. So it is tight out there, but if you do see something you like as a buyer, I can't guarantee anything, but this data would suggest that house will be more expensive the following year. So anyway, that's some data that I look at. This is a pretty streamlined look at it. There's a lot more that we get into on a daily basis, but wanted to just give you a quick look under the hood to see some of the things that we're looking at from a market perspective day in and day out. Hope you enjoyed it.